Florida becoming an uninsurable place.
What is happening, Best Ever community? This is Matt Faircloth, and I am your brand new host for the Best Ever CRE Show.
Hey, Best Ever listeners, it's fun when you get to talk to a friend, right? And so you're going to hear two friends talking about all kinds of real estate shop, and you're going to pretty much be the person that's sitting in the corner, perhaps enjoying a cup of coffee or even enjoying Jay likes to enjoy real beverages on his show, The Drunk Real Estate Show. So we're going to talk a bit with our friend Jay Scott. You are a resident of the state of Florida. And Florida, what do you do when you're in an area that seems to be getting hit a lot? Maybe just through the hurricane roulette wheel seems to be landing quite a bit on Florida these days. There's like Looney Tune talk, Jay, about like Florida becoming an uninsurable place, right? Or that the federal government they already have, may have to be the only place like that. Maybe if you live in Florida, you're going to have to get either state or federally funded insurance, period, because organizations like State Farm and those guys are pulling out. So from a residential standpoint and from an investment standpoint, what's the future of insurance in places that get hit by hurricanes a lot? And we're gonna ask Jay to break out his crystal ball a lot because I love futurist Jay Scott. And so I'm gonna ask Jay to pull out his crystal ball right here and tell me what insurance is like now and what you think it's gonna look like for the future in those hurricane prone areas.
Yeah, so I don't have a crystal ball, but I am a data guy. I like to look at the data and then I make guesses. What I mean. And so these are guesses, and I could be right, I could be wrong.
Next best thing.
These are the guesses that I'm using to drive my investing decisions, so take it for what it's worth. So in Florida, in just the 5 years that I've been here, we've seen a major shift in insurance, from providers to coverage to premium costs to everything. Over the last few years, so we've had a lot of insurers move out, property insurers move out of Florida over the last few years. The big ones have all moved out. In their place are a bunch of little ones. Problem with the little ones is they seem to have moved in for arbitrage opportunities. They've come in to get the high premium short term, hopeful that there's not going to be a major storm, they're not going to have to do a big payout, and they're going to make some big short term cash. The reality is most of these firms are underfunded, and while they have collected large premiums, just in the last month we've seen two major storms hit Florida, two major hurricanes, and the damage is likely to be in the tens of billions of dollars, maybe in the hundreds of billions, and it's very likely that a lot of these insurers that have moved in, these smaller insurers that have moved in, are not going to be able to cover the losses. In addition to that, Florida has implemented a public option, basically an insurance provider of last resort, a company called Citizens, and they provide property insurance, homeowners insurance to those homeowners who can't find affordable insurance elsewhere. So basically the rule of thumb is if they can't find you somebody 20% cheaper than they are, you can go with that public option. Problem with the public option is that they have taken over a lot of policies. 4 years ago, they had 400,000 policies in Florida. Now it's 1.3 or 1.4 million policies in Florida. Mm-hmm. They keep about $6 billion in the public fund to pay out on claims. They insure $400 billion in property. So basically, if they take a hit for 1.5% of their properties insured, they're going to run out of funds. And
they're backed by the government.
They're backed by the government.
And they never run out of money, do they?
In theory, the government has to, the legislature here in Florida has to vote to put more money into that fund. I suspect they will do that, but that comes at the cost of taxpayer dollars. Yeah. Now, here's the interesting thing, or there's a lot of interesting things here, but a lot of people say, should Florida be subsidizing the property market, the insurance market, or since Florida is technically a red state with a governor who seems to be pretty free market oriented, should Florida just let the insurance thing play itself out and let free markets take control? And if rates and premiums skyrocket, so be it. Here's the problem with that. Florida, one of the nice things about living in Florida is we don't have income tax. So if I make $1 million this year, I pay zero of that to the state of Florida for income tax. Mm-hmm. So where does Florida get their revenue from? Well, they get a lot of it from tourist tax, but the bulk of it is coming from property taxes. And so if property values in Florida go down or they plummet, that's going to significantly impact the government's ability to do business because they're losing all of that tax revenue. And so the government has this kind of double-edged sword where, they want to let the free market take control of things, but if the free market doesn't do a good job of propping up property values, that's going to have a significant hit on property taxes, and the government's going to be short of cash. And so the government's in this weird spot right now where they need to decide, do we fund this public option for insurance? We have a reinsurance fund here in Florida as well. It has $17 billion in it. So between the public fund and the reinsurance, that's $23 billion. We're likely to run out of that money just from the last two storms. And so the government's going to have to decide, do we keep pumping money into it? Do we ask the federal government for money? Do we ask FEMA for money? Or do we just sit back and let the free market take control? And rates would likely go up. I suspect rates are going to go up after the last two storms, 20 to 30%. That's on top of the 50 to 100% increase we've seen over the last couple of years. And if the government doesn't continue to fund and provide a whole lot more money to these public options, I suspect what we're going to see is rates double, triple, quadruple over the next couple of years.
Okay, I'm going to give you, and we're talking, guys, best of our listeners, we're talking residential, resi, and commercial, right? Because if it's a piece of real estate in the state of Florida, it still needs to be replaced if, God forbid, it gets hit by a hurricane. So let's just put that on the shelf there for a second. Jay, I'm going to hand you a magic wand. You see it? Here it is. You can't see it. It's invisible because it's magic, right? Here you go. Now, you fix the insurance problem. Poof, right? And you can say, I don't know, right? But if you're DeSantis, or if you've got the power, if you are the power that be, what is Jay Scott's idea? I'm sure you got him because you're my data buddy. So what do you think that a viable, maybe not bulletproof, but a viable fix would be for the insurance issue in Florida, and maybe also other hurricane-prone areas like Louisiana and Texas? Hey guys, hope you're loving this free education here on our YouTube channel. And if you guys love free stuff, I got more free stuff for you. Go to DeRosaGroup.com/tools, and you will see a bunch of free stuff that we've got out there. Everything from a superpower assessment to determine what your multifamily superpower is, all the way down to a free book on how to buy and find apartment buildings for you guys, even a free underwriting tool. It's all there. Go to DeRosaGroup.com/tools and grab some more free stuff. Grab that link down below, and let's head back to some free education on our YouTube channel.
Yeah, so let's be clear. This isn't just a Florida problem. This is a problem in...
I wanted to underscore that.
And it's not just Florida, Louisiana, Texas. We've got wildfires in California. You've got tornadoes in the Midwest. There are a lot of places that are prone to bad weather events, and for political reasons that we don't need to get into on this show, a lot of us suspect that those weather events are going to get worse and worse over the coming years and decades. Yeah. And so I think we're in an untenable situation right now when it comes to free market insurance. And so there are two options. And I don't think either of them are perfect, but your options are basically the government steps out and you say, hey, let the market do its thing. We're likely to see Florida lose a lot of homeowners. A lot of homeowners move out of the state. We're likely to see a lot of the coastal properties go away. Some investors and some homeowners will build to hurricane standards. They'll build 10, 12, 15 feet above sea level so that their properties...
Pin in that for a second. The reason why that happens is because homeowner Joe or Susie that lives on the beach in a nice house that is currently insured, because if you go free market, their insurance dollars go from probably $3,000-$4,000 a year now up to $15,000, $20,000, $30,000 a year to insure their property, pretty much at a premium amount where the insurance carrier is saying, okay, in the next 3 to 5 years, I'm going to have to insure you to a level where it's going to be full replacement. So you either build me a hurricane-safe bunker on that property and upgrade all construction for anything that's pretty much in the state or within a couple of miles of the coastline, or your insurance premiums are going to go 3.5, 4, 5, maybe 10x what they are now. That's what you're saying, correct?
Yeah, the math is pretty simple. These days, or over the last few years, homeowners in Florida have been paying on average about 1% of their house value in insurance premiums per year, which means that if your house gets destroyed less than once every 100 years, insurance companies make money. If your house gets destroyed more than once every 100 years, because it's 1% a year that you're paying, insurance companies lose money and they start to raise rates. So the question is, are these 100-year storms, or historically 100-year storms, have they now become 50-year storms? If so, now we have to be paying at least 2% for the insurance companies to make money. Have they become 25-year storms? We have to pay 4% for the insurance companies to make money. And so You figure out like how bad the storms are going to get, and that'll give you an idea of how much insurance is likely.
More than 25 years. It seems to be happening more frequently. It's just my 2 cents, right?
Exactly. And so, long story short, we can either let the free market take hold, in which case we're going to see an exodus from Florida. We're going to see a drop in property values because insurance is too expensive and because there's so many empty houses that people are leaving as they leave the state. Or we're going to get an influx of capital from the state and federal government for literally trillions of dollars over the next couple decades. And basically what we're going to see is that the insurance market is going to go the way of the health insurance market. So right now we have the ACA, we have Obamacare, which you can say has its issues. It's made health insurance more expensive. But the good side and the main goal of Obamacare was to ensure that everybody in this country had insurance. And most people do. A much higher percentage of people now have insurance than 10 years ago because we don't have to deal with this pre-existing condition thing. We have the same thing in the insurance market. So if we go that direction, do we now suddenly say, hey, we don't care about quote unquote pre-existing conditions? If your house was wiped out 4 times in the last 5 years and you're on the coast in the path of all these hurricanes, we're not going to charge you anymore because we don't care about that pre-existing condition. That's the risk. Do we treat property insurance like we treat health insurance, or do we treat it differently? And so I don't see a good solution. We're either going to be spending a lot of tax dollars, or Florida is going to see a lot of people leaving.
Like living in Florida is like having a pre-existing. Well, you do have heart disease. Yeah. Okay. I got it.
So my take is, and my crystal ball tells me that we're going to see Florida real estate values drop over the next few years because I don't think the government is going to tackle this head on short term. And so we are selling a lot of our single family stuff down here. We don't own any multi-family stuff down here. And we expect prices and values to drop over the next couple of years.
I'll throw this out here for the best ever listeners that here's something else that I believe in. Hey, again, this is Matt's magic wand, Matt's opinion and whatnot before we move on. There's always an opportunity in every crisis, in every problem, there also lies an opportunity, right? And I believe, Jay, the opportunity is to do more, let's call the plan hurricanification, right? I don't know if that's in the dictionary, but let's make it a word. That there could be hurricanification that's done on either existing real estate that's there, or God forbid, I don't want anybody to lose their house. It's just not why I'm in the business for this. But hopefully you could hurricanify existing real estate that's there, or God forbid, real estate that is now, let's call it functionally obsolete. Can't be there anymore. It might need to be removed and rebuilt with real estate that is able to withstand Cat 5 hurricanes flying over top of them about every 3 to 5 years, right? Maybe that there's an opportunity to do that. And maybe the money either comes from the government, the state, or just the private sector comes in and is how that implementation gets done. I don't have the business plan for it, but maybe, best ever listener, you've got some ideas on how existing stick frame or concrete built structure could get hurricanified to where a Cat 5 hurricane could fly right over top of it and the house is still standing, not guaranteed, but higher probability that they're in. If you can come up with a design and that implementation, the insurance company's going to say, I can go back to my model of that house being destroyed once every 100 years if you can convince them of this. And it takes time for these things to work their way through, but the insurance companies would charge less long-term for houses that are built for what is reality in these more hurricane hit areas. Jay, I want to keep moving, but any quick comments on that idea? Just again, I'm always looking at things like, hey, here's a problem. How could someone make money with this? Maybe not me, but somebody else.
Yeah, 100%. And I think long-term, that's going to be the solution. The problem is short-term, you have the risk of a lot of these houses going unoccupied because it's a lot of money to hurricanify, to use that term, the $1 trillion in real estate that sits on the Florida coast. And it is somewhere between $500 billion and $1 trillion. That's current cost or value of those properties. To hurricanify $1 trillion worth of properties could cost $5 trillion. And so it's unlikely any private company or even the government's going to be willing to throw that much money at it short term. But long term, I see that as a very viable option. And I think if your horizon is 5, 10, 20 years, then Florida will do just fine. But it's going to be a tumultuous couple years from here, I think.
Take that investor over listeners, because you gotta know where you're investing, understand what the rules of the game are. And if you're investing in areas that are getting more and more hurricanes, it's not if, but when.